Alessandres, thank you so much for joining us. U.S. interest rates and foreign exchange reporter, Bloomberg News, joining us here live in New York. Also joining us live right here is Elliott Stein, the pride of Stanford University, and coming to the ACC, so go figure that out. Elliott Stein, senior litigation
Wait a second, Stanford
and Cal are coming to the ACC.
Isn't that the Atlantic?
Yes, thank you.
Oh.
It makes no sense.
It makes no sense, but it's who knows what's going on. All right, talk to us about Morgan Stanley. I was reading something that maybe some regulators are looking at their asset management business.
Yeah. So yesterday, the Wall Street Journal, broke a story that the Federal Reserve has been looking at Morgan Stanley's wealth management business. In particular, it's money laundering controls, right? And they're concerned about rich clients. It seems that they may be focused on Latin America and South America. And apparently this has been going on for a few years, but we're only learning about it now because it seems like the Fed is not satisfied that Morgan Stanley has bolstered its AML controls sufficiently.
I mean, having worked in Wall Street firms my entire life, we get grilled on this every single year. And even here at Bloomberg, it's part of our training. I mean, it's just, you're knocked over the head with this stuff.
And yet they slipped through. And yet money laundering still happened at the big Wall Street banks.
Exactly.
So I guess you're not grilled enough.
Yeah, exactly. I mean, every bank is always being investigated for this stuff in some way or another, right? Sometimes it usually gets nipped in the bud pretty quickly. Here, it sounds like the Fed and Morgan Stanley have been having a conversation for at least 3 years about this particular issue. Morgan Stanley, keeps coming back to them saying, here's what we're doing to fix it. And I guess the Fed keeps saying, you need to do more. It's a little unclear where things stand now. It sounds like Morgan Stanley is still in this window that they've told the Fed they're going to, fix the situation. But if it doesn't get fixed, as we've seen historically, then you'll see a penalty down the road.
All right. So what about other banks? Are we going to see more and more go under the microscope?
Yeah. I mean, look, all of them are always under the microscope. I mean, just recently Bloomberg had a story in September about UBS and Credit Suisse's controls with respect to potential sanctions violations related to Russia. We haven't heard too much more about that, and the banks have denied that it's an issue, so we'll see if more comes out on that. Deutsche Bank just earlier this year in July was fined about $186 million by the Federal Reserve, again, for not fixing previous issues that it had, because it was fined in 2015 and in 2017 for sanctions violations and AML problems. And so, again, these things are just recurring issues all the time.
So in reality, from a legal perspective, historically, have these things ever been a material risk? I mean, material risk to their stock or their bonds or anything like that?
Usually not. I mean, a lot of these are sort of just the cost of doing business. You think about the example I just mentioned, Deutsche Bank's $186 million. That's, not a huge amount. Some other cases wind up being more. Danske Bank paid about $1 billion last year for all sorts of money laundering issues and bank fraud issues. So sometimes it does rise to the level where it is more material for a bank, but a lot of times we're talking about low $100 million, which for the banks is not too bad.
All right, so what else are you looking at here? What else are you guys working on there in terms of kind of looking at some of the litigation risk out there for financials?
The SEC obviously has been super active, right? I mean, they have a lawsuit against Coinbase. They sued Virtu a couple months ago. And just generally,
Like, I thought the SEC would be, more supportive or constructive towards crypto. Gary Gensler, I kind of thought, or a lot of folks thought that he understood crypto, maybe he saw the value in crypto, but that's not necessarily been the case, has it?
Yeah, the main critique is that they have been going after crypto on an enforcement basis rather than coming out with a rule-making process, which would, sort of make things clearer for the whole industry in one fell swoop. But instead, they're sort of, going after players like piecemeal, and then you don't really get the full clarity that you would otherwise.
Yeah, I think the idea is that he understood crypto, but that doesn't necessarily mean that he doesn't think it's a Ponzi scheme.
Okay, I get it. So I guess, the issue I kind of feel like the crypto space is kind of yearning for some structure.
For sure.
Wouldn't you like to know where the guardrails are?
Well, some of it is, right?
Yes.
The rest of it just wants to keep on doing rug pulls and scams.
Right. But I think the big players like Coinbase in particular, they really have been screaming for rules and regulations around this stuff for a while. And what's interesting is this SEC under Gary Gensler, I think, has promulgated the most rules of any SEC in recent memory. But there's obviously one, glaring absence, and that's crypto.
Yeah. Also, they want rules at Coinbase, but they don't want a rule that says staking Ethereum is a security. So
right, yeah,
there are certain rules they want, and other rules they really don't.
That's absolutely right. We'll see what rules actually come out, because then guess what? They'll probably sue over those rules and say that the SEC exceeded its authority.
Exactly.
All right, Elliott, thanks so much for joining us. Elliott Stein, he's a senior litigation analyst. He looks at the financial industries, and there's lots of litigation around the big financial companies out there, so we stay on top of that. He does that for Bloomberg Intelligence, and joining us live here in our Bloomberg Interactive Broker Studio. Good stuff.